Hello everyone, I'm Marty and welcome to the August 2021 market update. Just going to jump into a couple of definitions first. The sales ratio is one I'm going to talk about through my presentation. All the sales ratio is the absorption rate of product into the market every month. So if less than 11% of the product is sold every month in a given area, that is what we call a buyer's market, downward pressure on pricing. If between 12 and 20% of the product is being sold every month and the absorption rate, we're in a balanced market. It's not favoring the buyers or the sellers. But if more than 21% of the product is being sold on a monthly basis, we are in a seller's market, upward pressure on pricing. So let's jump right into our market speedo for the last month. And as our market speedo stats will show us, we're down from those peaks we had in spring. It's softening. We're still above the overall averages that we normally see. And currently throughout Metro Vancouver, we're at a 28% sales ratio. So overall, in terms of the market, for all product, we're still in that seller's market. We'll show you why that is and what products are and aren't. So overall, from this time last year, total listings are down. We'll talk a little bit about that, why they're down now, how that's impacting pricing in the market. Total number of sales from this time last year, for July of last year, of course, sales are up. We were still trying to adjust to the new pandemic last summer. So of course, more sales took place this July. Sale price is up year over year, 6% overall for Metro Vancouver. So all pretty interesting stats. This is the table I like, and the important red boxed area is showing clearly that prices have leveled off and are beginning to soften. Let's look at detached houses first. Sales activity from year over year stats for houses is down 6.3%. So 6.3% less houses are selling last month than they were a year ago. Benchmark price year over year, detached houses, Metro Vancouver, are up 21%. So a good jump from summer last year. But month over month, the price has not changed for detached houses in Metro Van. Attached townhomes and duplexes, the sales activity is up 0.5%, so virtually no increase year over year. The benchmark price up, attached townhomes and duplexes from last year up 17%, and from last month, virtually no change. Apartment condos year over year were up, sales activity 19%, still significant. Benchmark price year over year up 8%, and since last month, slight drop. So you can sort of see overall what's happening here. More currently, year over year, we're still up in price in all categories from last year. That's interesting to note. So good highlights from this last month. The four market drivers, let's talk about those again. Number one, money being cheap. It's still cheap historically, but interest rates are on the rise. So this is indeed a changing factor. Money's becoming a little more expensive every month to borrow. We'll jump into that in a little more detail later. Savings are up. Now the new stat tabulated from last year is Canadians saved $180 billion in their bank accounts over the past year because of not traveling, not eating out, not spending. That's a lot of money pent up. That is also a changing factor because many have bought product and things already. The consumption rate has been booming since December of last year. So savings, the third driver in our market, of course, is demand for more space. That's still there. That's constant. People need more space to work and play in. They want private yards, private balconies. That is one of the big drivers in our market, and that is still the case for all age groups. The last driver, supply being low. Now remember from my last update, you saw the inventory levels increasing right up into summer, and that was impacting the market and softening it, and we'll see how that's changed now over the last month. But the supply being low is one major driver, a major factor in our market. And again, we'll jump into that in a little more detail later. So the supply is still low, but it is changing month to month. We'll go into that. So overall, very clearly, we're seeing prices beginning their downward trend. Okay, what's hot and what's not? Now again, sales ratio. Remember, if we're in that seller's market over 21%, there's upward pressure on pricing. If we're in a balanced market, it's not favoring the buyers or the sellers, but a buyer's market, as soon as we get to that 11% or less, there's downward pressure on pricing. Okay, so let's jump into this. Detached houses, Vancouver West Side, we're at 13%. So we're right at the bottom range of a balanced market. It looks like we're going to be hitting a buyer's market shortly. We'll see, but you can see from our peak back in April how that has slowly degraded as we head into summer at 13%. And you can see the breakdown in various price bands, kind of interesting to see. Bottom line is, the more affordable, the more entry level the product, the higher the sales ratio, more active it is, and then there's sales ratios for different areas. So Vancouver West Side detached houses, 13% balanced market. Condos and townhomes West Side, 30%, still well into a seller's market, so there's still some upward pressure as of last month for pricing on condos and townhomes. But again, the interesting thing is you can see our peak in April, 46%, May was 40%, June 39%, July 34%, now we're at 30%. You can see that drop in the sales ratio taking place. And again, the more affordable product, entry-level product, right up to $1 million in the West Side is still well into a very active seller's market. So our market is very product and price oriented now. There's hot spots, there's cold spots, and there's a lot in between, and the whole market shift is taking place. So that's very interesting to see. Condos, townhomes, downtown, a little less hot than the West Side at 24%, but still in a seller's market. You can see our hottest market month was April at 51%, and you can see as it's slowly dropping down. Last month we had a 20% sales ratio, a bit of a jump in activity downtown, again being driven primarily by the lesser priced product, well under $1 million. Okay, detached houses East Side, 13%. Big drop from last month at 24%. We went from a strong seller's market into a very soft, balanced market for detached houses East Side. Again, when we're looking at product that's less expensive in the East Side, very strong seller's market, but predominantly overall, we're in a balanced market, and the average being at 13% towards the bottom of that balanced market. Very interesting to note. Condos and townhouses, East Side, 30%. Still active, still pretty hot. But look at where we were in April, 84%. Holy cow. And you can see 59%, 49% jumped up again last month to 54%. Some hot spots. Now it's down to 30%. Still a very legitimate seller's market. Still some upward pressure on condos and townhomes. Same story. Entry-level product here being very, very hot. The more expensive attached strata product in the East Side being softer, okay? Overall, 30% condos, townhomes, Vancouver East Side. What's happening in the burbs? Now, let me just stop and say one of the things that's impacting our market right now, one of the main drivers is inventory, remember. It's summer. July has just taken place. Many people left town. Many buyers left town. Moreover, many sellers left town and of course did not list their property in July, and probably the same case will happen in August. The inventory levels that were steadily increasing through spring have now started to drop, and I'll show you some graphs later on that, but that's impacting the sales ratio. Economics 100. If the supply goes down and the demand stays relatively constant, maybe even drops a bit, that can impact the sales ratio and push it not artificially up, but will keep it stronger. But we can't look at that as a really good bearing on the overall market because many people are away, enjoying themselves, rightly so. We all deserve a holiday. So detached monthly variances from last month throughout the whole suburban Vancouver area. Everything that's not circled has dropped their sales ratio last month. North Vancouver, West Vancouver, downtown, west side, as we saw, except the ones that have increased have been Burnaby, east side of Vancouver, as we saw, Surrey is up, North Delta's up, Cloverdale, Langley, Pitt Meadows overall. But what's driving that increased sales ratio, remember, is that entry-level product is super, super hot, but that price level is slowly dropping down, and it's cooling as we get more to the entry-level stuff. So detached, a lot of areas where we had a slight increase, again, because the inventory is dropping. Attached monthly variances, month over month, we're seeing pretty well a split. Most, half of the product has, and most of the suburbs have dropped in sales ratio, but downtown Vancouver up in attached, West Vancouver, North Vancouver, Port Moody, Coquitlam, Mission, Abbotsford, South Surrey, North Delta, Surrey, New Westminster, Port Moody. So again, we're getting those more affordable product in the mid to low end of the attached in those suburban areas, really pushing and people buying perhaps in July before they're leaving for their holidays. Then the inventory levels have dropped a little bit because people aren't listing right now, and that's pushed up some of these sales ratios. So that's interesting. Now, what next? What's going on? Where are we going? So let's talk about that. Let's talk about COVID briefly, because I know you never hear about COVID. We've got already right now total of 1.433 million cases reported in Canada. I thought I'd do the all-time graph here. Here's last year, look at that. Then we had that big surge and fall of COVID cases, drop down, and then now we saw that real big increase in spring. Interesting how the peaks got greater, and a nice drop down in July, and now we're starting to see that resurgence of the Delta variant taking place. We're starting to see those numbers grow. The hospitalization cases overall are down, but again, we're going to see those increasing as we're reading. Predominantly unvaccinated people are ending up in hospital. That seems to be the trend that's taking place now with this Delta variant, which is highly contagious. So let's jump into this. So overall, proudly we can say almost 60% of the Canadian public has been double vaccinated. Good news. We've got Mr. Bean down here. He's giving that skeptical look at us. And why is he? Because overall, there's the thumbs up. Very good progress. Overall, the stat now that we got to shoot for is 90%, or else, according to the specialists in the area, to avoid that big fourth wave in fall, we got to get vaccinated. We got to hit 90%. So we're at 60. We've got another 30 to go. So if you haven't been yet, drop in. I hear they're doing Wednesday drop-ins at the vaccination centers. Without an appointment, you can drop in. There's my plug. Go out there and get the shot. Let's pop into the next one here. A few more stats you might find interesting. Employment levels by wage tier. So if we look at the high wage earners in blue, they're well past the COVID baseline and back at full levels of earnings, even past of what we were pre-COVID. The medium wage earners have just trickled back to where we were before the pandemic, but the low wage earners, again, were hit the hardest and have not fully recovered. That's an important segment of our market. Those are entry-level buyers that feed the entry of the market, and they're important to keep that funnel full to get up to the higher end product for upgrade buyers and sellers. So that's a really interesting stat to look at. Overall, the economy has done very well since the end of last year. You can see we peaked out in April, May. We're starting to see a little drop in activity. We're all aware of that. No surprise, tourists entering BC has flatlined since May of last year, for obvious reasons. That's impacting a lot of the entry-level wage earners as well, because our tourism industry is shut down, big part of our BC economy. Business and consumer confidence, these are really great graphs we're getting from the BCREA. The business confidence is well past the COVID baseline, but consumer confidence is lagging behind, getting close to where we were pre-COVID, but lagging behind the business confidence. And it's the consumer confidence that we need to get that confidence back into a full market swing again, okay? So the cost of borrowing, I'm gonna focus on the two main drivers that really dramatically impact our market: mortgage rates, the cost of borrowing. Here's the trend graph that I showed you last month. We are going to see that baseline increase, and depending on inflation, if we get an inflation rate of about 3%, you can see those interest rates are going to increase a little bit greater. If we have an accelerated inflation of over 4%, we could see interest rates dramatically change. These are all well past 4 to 5% within the next few years. So interest rates increasing will impact our market and make product less affordable for buyers, and that will impact pricing as well. So the next major driver, inventory levels. Now remember what I told you through spring. Let's look at it for the west side in particular. For houses, look at the red line. You can see since December of last year, the number of houses in the west side increased, and then bunk, everybody went on holiday and they started to drop. Okay, same with attached condos and townhomes. We had a very good increase in listings. It hit a peak in June, and then boom, little drop in July. You're going to see the same for August. And east side, same story. Inventory went up, it peaked out, and then it dropped into summer. It went up and peaked out for condos east side, and then it dropped in summer. Now those inventory levels dropping are artificially, or maybe not artificially, but they are impacting the sales ratios, because the inventory is dropping. There's still people here buying, and that is pushing up the sales ratio. The inventory that's left is being eaten up. It's not being replenished. That will change come September. So that's really interesting to look at. So remember, our sales ratio peaked back in April and has fallen since. The overall home sales in BC, interesting graph. Here's when COVID hit, and you can see, whoa, big increase in sales, peaking out again March, April, and then we have been decreasing since then, okay? And there you go, new listings, there we go. We had a real peak back in April, and then we started to see a decrease as we went into summer. And that's the same region by region throughout BC. Same trend where we had that peak in spring and then a drop, okay? And then the historical average price graph, I love to look at that one, detached. We've got attached and condominium pricing since the beginning of time in 1977. Okay, so let's talk about what's going to happen. We've been pretty accurate in forecasting this year, that 15% increase, bang on in terms of that hitting in April. I am forecasting about a 20 to 40% drop. We're going to lose, I believe, everything we've gained this year in this next softening of the market, and it could be significantly greater. There are some factors that will impact how extensive and when this will happen. Number one, the rollout of the vaccine. We're doing very well at 60%. That's awesome. The big one is the spread of the new Delta variant and how that's impacting the overall consumer confidence and getting out there and buying and selling, getting that activity going, depending how this variant's starting to really climb dramatically. So that's a big impact on our correction that's coming. And the election's coming in the next few months, and that will determine what government gets in and what kind of tax changes, how aggressive are they going to be in trying to get that money back, that $1 trillion that we've spent, keeping the economy going, keeping people fed and employed and paying their lease payments and all of that, rightly so, needs to be made back. How aggressive is the government going to be? And when does the government stimulus end? Because it's going to have to end at some point. That will impact our market for sure. Immigration targets. Okay, we're talking Hong Kong buyers. A lot of money could come from Hong Kong. 43.6 billion were electronically transferred last year. It's a lot of money. It's an impact. It's not dramatic impact, but it's certainly an impact. And Canada's increased its target by about 50,000 permanent residents to a total of 401,000 they'd like to bring into Canada this year. So that's all good stuff that will certainly impact our market as well. The silver lining, so to speak, in all the other bad news that we've got in our market. So that's kind of interesting. Again, I'll show you this very quickly. The pent-up demand, the 180 billion saved, the full vaccine program, economy booming, all of that led us up to that 15% increase. And now we're at that point where we're seeing mortgage rates beginning to climb, the inventory levels increasing apart from the summer cyclical lull that we're seeing now for July and August. The federal election's coming. Boom. We're going to see some activity happening around that. So perhaps some new tax measures, pandemic assistance programs ending, sellers beginning to start to list to take advantage of the price gain that we had from last year. That's important. Buyers might stop buying once prices are falling significantly and wait till that bottom. That's our correction period, where we're going to have rising inflation. Again, we'll determine how quickly the interest rates climb, and that will be impacted. They're tied together, and the tax rates are factors. So I'm thinking it could be as much as 20 to 40% worst case scenario. So that pretty well sums up my August update. Again, in summary, things seem to have peaked. They are softening. We're getting a lot of missing data over summer. People aren't listing, etc. The next telltale sign. I'll do another update, of course, in September for the August data that comes through. There won't be a lot of big changes. The big telltale month will be September. How many people come into the market putting their homes on? How many people are going to buy? When's that election coming? What are they going to do? There's a whole bunch of dramatic factors that will come into play for September. We're going to see all of that. I'm here to answer all your questions. Feel free. I've been getting a lot of great emails from people. I love to answer your questions. Feel free to send me an email. And if you like my updates, please subscribe to my YouTube page, Pospisil Realty Group. I think I've hit some pretty good plateaus there. Love to see that number increasing. That's fun. And of course, you can like us on Facebook as well. So that is my market summary for August. Stay safe, get vaccinated, enjoy your summer. We're getting beautiful weather. I hope you're all well, and I will see you in a month.